Hello and welcome to More Than Commas. Cory here, and today we're going to talk about a question that I think is on a lot of investors' minds. Something like, what is going on with AI right now and all these companies, and is this a bubble? So make sure to like and subscribe, maybe leave us a comment if something jumps out at you today, and definitely share this with a friend who might be asking the same questions. To get us started, I'm going to go somewhere unexpected. That's the Three Stooges. Let's watch this video real quick as an intro to this topic, and then we're going to talk about it. So this is an old Three Stooges clip brought to us by St. Paul's Free University on YouTube, and they titled it "How the Banking System Works," and we're going to talk about why that's important as well. So quick clip.
And speaking of money, how about the $20 you owe me?
Oh, yeah? Well, I only got 10, so here's 10, I owe you 10.
Thanks.
Hey, Mo, you owe me 20.
Well, here's 10, I'll owe you 10.
You owe me 20.
Here's 10, I owe you 10.
Here's the 10 I owe you.
Here's the 10 I owe you.
Here's the 10 I owe you.
Good, now we're all even.
I've seen it so many times, and I still can't help laughing. And the humor is that the logic, it almost makes sense. It happens so quick that it seems like everyone's going to be happy. And this is not completely how our banking system works, but the fractional reserve system does allow banks to lend out more money than they have. They're passing the same dollars around, and so it can feel similar to that. But the banking system has some important safeguards, like reserve requirements and the FDIC insurance program to protect a good chunk of the money that we all have invested in the banks. Now, all of these companies that are involved in AI and investing in AI, they don't have those same set of controls in the banking system. So first, let's talk about these major players. And if you haven't heard of any of these concepts like round tripping that we're going to talk about today, here's a quick primer. So the main characters of this story: OpenAI. They're the makers of ChatGPT. They're probably the most well-known company in the AI space, and they're definitely one of the biggest players. Nvidia is a company that a lot of us might have heard about over the last several years because they've got famous making the graphics cards that previously were mainly used by video gamers trying to build the best PCs they possibly could to play the most beautiful and high intensity video games. Then those cards got really useful for mining Bitcoin. And so that gave Nvidia a big boost. And now their chips are really useful for making the data centers that AI companies need to run their suites of software. So OpenAI builds the software, Nvidia builds the chips, and companies like Oracle use those chips to create the data centers that AI runs on. You know, every time we do a search on AI, every time we have a conversation with one of those bots, that's using power in a data center somewhere. Some computer somewhere is running that, and that's creating, electricity costs, and that needs physical infrastructure. So there's all kinds of investment happening behind the scenes to make those those chats of like, who was the winner of the Grammy Awards in 1999 or whatever random questions. That's the most of what we all use for ChatGPT anyway. So another YouTuber named Hank Green has a really great video. I'm going to play a very short clip of that one as well. We'll link the full video in the notes. He's talking largely about a visualization that Bloomberg News did about how all of these companies are interwoven and investing in each other. So we're going to watch just one short clip of this as well.
I love a good graphical representation of reality. Now, they're never perfect. There's always data that's being left out, but I'm going to talk today about one that contains a lot of information and took a little bit of time for me to parse. And once I did, it kind of terrified me. I'm going to show it to you as well. What a good little visualization we have on our hands here. How Nvidia and OpenAI fuel the AI money machine. So very quickly, to explain, Nvidia makes the chips that do the compute that creates the artificial intelligence systems. OpenAI is the biggest company that creates the systems that use those chips to create artificial intelligence systems that do stuff. Not just the chatbot, but also all of the other things that it does, including Sora 2, which you've heard my opinion on. And then there's Microsoft. You've heard of them. AMD is another chip maker like Nvidia, Oracle, and a few others in here like CoreWeave, possibly some others. I actually don't know what all these companies are. I think Nscale might be one as well, but it's the little dot. Oracle and CoreWeave, at least, are the companies that have built like the data centers, and they buy chips from Nvidia and then they like lease out the compute. They sell that. So basically, Intel and AMD and Nvidia sell chips to the AI companies or to the data center companies, and then the data center companies sell the compute to the AI companies. Sometimes the middleman running the data center is there, sometimes it's not there. But in either case, Nvidia is doing very well because so many people want their chips right now. But we can think of it as like AI companies, chip companies, and then the middlemen compute companies. What the AI companies want is to be able to keep existing. Right now, OpenAI, worth $500 billion, has $12 billion of revenue. That's not profit. That's the amount of money they made total. Their profit is deeply in the negative. And Nvidia has extremely high profit. They make way more money than they spend because people really want their chips right now, and so they'll pay way extra for them, and they're the best chips. They're the best chips. Crunch, 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 crunch. There's a huge amount of demand for those chips. The prices are way up. It's very good for Nvidia. That's why they are the largest company in the world and are one company that is worth more than the entire pharmaceutical industry combined.
This episode of More Than Commas is brought to you by Sound Financial Group, where we help families and business owners build and protect wealth through clear, long-term financial strategies. Whether it's retirement planning, investment management, or navigating your overall financial strategy, we're here to help guide you every step of the way. To learn more about how we can help you secure your financial future, visit sfgway.com. You can run retirement calculations and download content to read in your own time.
So as Hank was sharing with us, there's a lot going on here. And here's this graph from Bloomberg again. So Nvidia is investing money in OpenAI, which then OpenAI uses that money to buy Nvidia chips. Again, it's not a one-to-one. It does amount to a very nice discount on the chips for OpenAI. Oracle signs a deal with OpenAI for OpenAI to lease or rent computers from Oracle to run, data centers to run their technology. And then Oracle buys a bunch of chips from Nvidia to build those data centers. And the numbers are remarkable. Like he said, Oracle has $12 billion of revenue, and they just signed a $300 billion deal with OpenAI. So it can feel a little bit like the Three Stooges, except as they're passing the $10 bill around, it turns into a $20 bill and then a $50 bill and then a $100 bill just for passing it around that circle. But OpenAI loses money every time we ask ChatGPT a question. Even if you've got a paid subscription, OpenAI is losing money every time you ask them a question. And the bigger issue for all of us is that these chips from Nvidia have a limited lifespan. There's another podcast called The Knowledge Project from Shane Parrish. He's a great thinker and writer, and I highly recommend checking out his book, Clear Thinking. He recently interviewed Anthony Shilapati, my new favorite accountant to listen to on the radio. And Anthony brought up a reference back to the 1990s, 2000s tech bubble. Companies like Nortel, Lucent, and Cisco crashed in the dot-com bubble, but they also built the fiber optic network that we still run the internet on today. So, train tracks also got overbuilt when that was cutting edge technology. A lot of companies crashed, but they left behind these rails that we got to run on for decades, and new entrepreneurs got to come in and co-op for decades to come. These chips and data centers that run AI are going to succumb to obsolescence a lot sooner. So there's pieces of this situation that smell like bubbles we've seen before, with less of the upside of permanent infrastructure to leave behind. Now, when that happens, we don't know. And of course, none of us know what the full implications of this AI technology are or how it could change the world. And there's lots to think about there. I don't know if it's going to make work for humans obsolete. It might. When I ask it some questions and get some strange answers, it seems like we're not there yet, but this technology is developing and changing rapidly. But for now, basic financial principles apply, and none of these companies are exempt from from thinking about the basics of finance. And I think that's how we should look through those lenses, because it's still humans running companies trying to produce some value. And OpenAI has not figured out how to turn a profit on this. None of these companies have figured out how to create that lasting value yet. So what do? Number one, diversify. Own the markets, not just a closed loop of companies. As investors, we should keep owning the technology sector and all the other sectors. This round trip loop of self-investing means that it's not just up to AI technology to prove itself out. If any of these companies along the loop encounter some kind of other problem that reduces their results that's not related to AI at all, that could still bring down a lot of the other companies in this loop. We've all heard examples of, there's from any kind of new company, new technology, or real estate, like real estate developments that seem really good on paper lose and crash all the time because of some random law that comes into place that affects their development, like saving the spotted owl or something like that, that has nothing to do with their ability to build real estate or their expertise or the value of what that real estate would bring, but just some entirely different concern that comes in out of nowhere and kills that idea. So it's not just about AI, but as all of these companies come into this loop, anything that affects one of them might make the whole thing fall apart. And so that's something to think about. So that's why we say stay diversified. But remember, staying diversified still means own the S&P as well. That sector has been delivering amazing returns and could continue that trend for a while. If a reversion to the mean is coming for the S&P, we don't know exactly when that is. So owning a balanced portfolio gives us access to the upside without vulnerability to all of the loss. Because, when one sector starts experiencing problems, money often flows to a different sector that expands. If this conversation stirred some thoughts or worries, let us know in the comments. Tell us whether you think AI is a bubble or a boom or in the early innings of something much larger. And don't forget to like, subscribe, and share this episode with someone who maybe has Nvidia in their portfolio or just asked you about the S&P the other day. Until next time, get on back to living a great life. Thanks for listening.